Gold crashed by 15% and silver down by almost 40% in last 24 hours. This wasn't just any crash, this was the biggest liquidation in metals history. I'll tell you exactly why it happened, but first a 30-second lesson that will change how you see gold forever. 4 things control metals prices. 1. Dollar. If dollar weak, gold goes up. If dollar strong, gold goes down. Always inverse relationship. 2. Interest rates. Gold pays no interest. So when rates are high, people buy bonds instead. And when rates fall, gold shines. 3. Bond yields. Yields up, gold down. Yields down, gold up. Simple. 4. Sentiment. Fear in market, people run to gold. But greed in market, people move away from gold. Now the crazy part is on Friday, all 4 of these flipped against gold at the same time. Jan 27, Trump makes a statement. A weaker dollar would help American businesses. Now every trader on the planet hears this and they think, okay, government wants weak dollar. So they short the dollar, go long on gold and silver, and it works. Gold hits all-time high and silver goes flying. Everyone is making money. But then came Friday. Trump announces Kevin Walsh as next Fed chairman. Now if you don't know this name, this is the guy who believes money printing is evil. Hard money, strong dollar. Monday we want weak dollar. Friday here's a Fed chair who will keep the dollar strong. Traders are confused and trapped. They need to buy dollars back. What does that mean? Sell gold and silver now. Now usually whenever metals fall, someone catches it and that someone is China, biggest buyer in the world. But not this time. Shanghai Exchange hiked margin requirements on silver. With no support, no floor, prices went in a free fall, lower circuits. Then CME also did what exchanges do in panic. They also hike margins. Thousands of traders get margin calls, can't pay and get liquidated automatically. Algos see the selling and they trigger more sells. Stop losses hit, more liquidation, almost death spiral. So what now? Here is how I think about it. What happened on Friday was short term. Traders, leverage, margin calls, paper market. But zoom out and ask yourself the real question. Is de-dollarization still happening? Are central banks still buying gold? Is BRICS pushing for dollar alternative? Is US debt still 36 trillion and climbing? Is the world still moving away from dollar dependence? Yes. All 4 factors which I showed you, they move prices day to day, week to week. That is trading. But de-dollarization, that is structural. That is decade level. That's not changing because of one Fed chairman. So the question is not should I buy the dip? The question is, are you trading short-term factors or are you investing long-term shift? If you know the answer of that, you know what exactly you need to do. This was my research. Do your own and decide your next steps and follow me for more such insights.